To get started, I would recommend that you get a completely free gold IRA guide that is written by the best and most trusted gold IRA company that I have found after over 20 years as an expert independent gold researcher. This free gold IRA guide will explain everything you need to know and will also answer any questions you may have about gold IRAs. This is the best guide I have seen in my lifetime as an expert independent gold researcher with more than 20 years of experience, and this is the best guide available anywhere in my opinion. Also, when you get this free gold IRA guide, you will get free access to the top gold IRA experts who will provide you with personalized support and help over the phone, and they will answer any questions you may have. To get this top free gold IRA guide, simply go to the link that is in the episode show notes or go to the link that is in the episode description. So again, to get this top free gold IRA guide, simply go to the link that is in the episode show notes or go to the link that is in the episode description. This free guide is really worth getting. Simply go to the link that is in the episode show notes or go to the link that is in the episode description. Also, this audiobook is not financial, investment, or tax advice. For financial, investment, or tax advice, consult a financial, investment, or tax advisor and take full responsibility for any decision you make. Okay, let's start the audiobook. Gold IRA Retirement: Diversify Savings Beyond Stocks and Bonds. The Shifting Sands of Retirement Planning. Why traditional strategies are no longer enough. For generations, the mantra of retirement planning has been simple. Invest in a diversified portfolio of stocks and bonds and let compound interest work its magic. This approach, while historically sound, is facing unprecedented challenges in today's increasingly complex and unpredictable global economic landscape. The bedrock of this traditional strategy, the perceived unwavering stability and consistent growth of equities and fixed income, is showing cracks under the pressure of factors ranging from unchecked inflation and geopolitical instability to volatile markets and the looming specter of recession. Retirees and those diligently saving for their golden years are beginning to awaken to a sobering reality. Relying solely on traditional stock and bond portfolios may no longer be sufficient to secure a comfortable and financially independent retirement. The relentless march of inflation is eroding purchasing power, while stock market fluctuations can wipe out years of gains in a blink. Bond yields, historically a source of stable income, have struggled to keep pace with rising prices, diminishing their real returns. This precarious situation demands a more robust, resilient, and diversified approach to retirement savings. One that extends beyond the confines of conventional wisdom and embraces alternative asset classes capable of weathering economic storms. Enter the Gold IRA, a self-directed individual retirement account that allows investors to hold physical gold, silver, platinum, and palladium as part of their retirement savings. Far from being a fringe investment, gold IRAs represent a strategic and increasingly vital tool for diversification, offering a unique hedge against the very risks that threaten the foundations of traditional retirement portfolios. This comprehensive audiobook will delve deep into the world of gold IRAs, exploring why they are becoming an indispensable component of prudent retirement planning, particularly in an era defined by uncertainty and economic turbulence. We will unpack the compelling arguments for diversifying beyond stocks and bonds, examine the unique benefits of gold as a retirement asset, and meticulously guide you through the intricacies of establishing and managing a gold IRA to safeguard and grow your hard-earned savings for a secure and prosperous future. The cracks in the foundation: why stocks and bonds are losing their luster. To truly appreciate the burgeoning appeal of gold IRAs, we must first understand the vulnerabilities inherent in solely relying on stocks and bonds for retirement. While these asset classes have historically formed the cornerstone of retirement portfolios, several converging factors are diminishing their effectiveness and exposing investors to heightened risks. 1. The inflation monster. Inflation, the insidious erosion of purchasing power, has surged to levels not seen in decades. Traditional fixed-income investments, like bonds, are particularly vulnerable to inflation because their fixed interest payments lose real value as prices rise. While some bonds offer inflation protection, their yields often struggle to outpace the relentless advance of consumer price increases. Stocks, while potentially offering some inflation hedge, are not immune. Rising input costs, decreased consumer spending due to inflation, and the Federal Reserve's aggressive interest rate hikes to combat inflation can all negatively impact corporate earnings and stock valuations. 2. Market volatility. The roller coaster ride. The stock market has become increasingly volatile, whipsawing investors with unpredictable swings driven by geopolitical events, economic data releases, and investor sentiment. Retirees and those nearing retirement are particularly susceptible to the dangers of market volatility. A significant market downturn just before or during retirement can severely deplete savings and jeopardize their ability to maintain their desired lifestyle. While long-term investing can smooth out some volatility, the amplified fluctuations of modern markets demand a more resilient portfolio strategy. 3. Geopolitical instability. A world on edge. The world is grappling with unprecedented geopolitical uncertainty. From international conflicts and trade wars to political polarization and social unrest, global events are exerting a significant influence on financial markets. These unpredictable events can trigger market sell-offs and economic instability, impacting both stocks and bonds. Assets with a proven track record of stability during times of turmoil become increasingly valuable in such an environment. 4. Currency debasement. The silent thief. Government policies, particularly expansionary monetary policies aimed at stimulating economies, can lead to currency debasement. When the value of fiat currencies, like the US dollar, declines, the purchasing power of savings denominated in those currencies also diminishes. Assets that hold their value or appreciate during periods of currency weakness provide crucial protection against this insidious erosion of wealth. 5. Looming recession. The economic headwind. Many economists predict a potential recession on the horizon, driven by high inflation, rising interest rates, and slowing economic growth. Recessions typically lead to corporate earnings declines, increased unemployment, and stock market corrections. While bonds are often considered safer during recessions, they may still provide lackluster returns in a low-growth environment, particularly if inflation remains elevated. These converging headwinds are not merely theoretical risks, they are tangible challenges impacting savers and retirees today. Relying solely on stocks and bonds in this environment is akin to navigating a turbulent sea in a small boat, vulnerable to every wave and gust of wind. A more robust approach is needed, one that incorporates asset classes designed to act as ballast during these storms. Assets like physical gold. Gold, the timeless anchor of value, why it belongs in your retirement portfolio. Gold, often referred to as the eternal metal, has held a unique position in human civilization for millennia. Beyond its aesthetic appeal and use in jewelry, gold possesses fundamental characteristics that make it an exceptional asset for wealth preservation and diversification, particularly within a retirement portfolio. The ultimate diversifier. Uncorrelated asset. One of the most compelling arguments for including gold in a retirement portfolio is its low or negative correlation to traditional assets like stocks and bonds. This means that gold tends to move independently, and often in the opposite direction, of these assets. When stocks are plummeting due to market turmoil or economic downturn, gold often rises in value as investors seek safe haven and portfolio diversification. This inverse relationship provides a crucial counterbalance to the volatility of stocks and bonds, reducing overall portfolio risk and enhancing stability. 2. Inflation hedge extraordinaire. Preserving purchasing power. Gold has a long and well-documented history as an effective hedge against inflation. Unlike fiat currencies, which can be printed at will, gold's supply is limited and expensive to increase. As inflation erodes the purchasing power of paper money, the price of gold tends to rise as investors seek to preserve their wealth in a tangible asset that maintains its value. Throughout history, during periods of high inflation, gold has consistently outperformed other asset classes, serving as a reliable store of value. 3. Safe haven in times of crisis, a fortress of stability. During periods of geopolitical instability, economic uncertainty, or financial crises, gold acts as a safe haven asset. Investors flock to gold during times of turmoil because it is perceived as a store of value that is independent of government policies, economic fluctuations, and corporate performance. Gold's intrinsic value and its global recognition as a safe haven asset make it a refuge during market storms, providing portfolio stability and peace of mind in turbulent times. 4. Tangible asset. Physical security and control. Unlike stocks and bonds, which are essentially paper or digital representations of ownership, physical gold is a tangible asset you can hold in your hand. This tangibility provides a sense of security and control that paper assets simply cannot offer. In an increasingly digital and intangible world, the physical nature of gold resonates with investors seeking concrete assets outside the traditional financial system. Owning physical gold in a gold IRA offers direct ownership and mitigates risks associated with counterparty failures or systemic financial instability. 5. Store of value across generations. Enduring legacy. Gold has served as a store of value for thousands of years, transcending geopolitical upheavals, currency collapses, and economic cycles. Its inherent scarcity, durability, and universal appeal ensure its enduring value across generations. Investing in gold within a gold IRA is not just about securing your own retirement. It's about building a lasting legacy of wealth that can be passed down to future generations, preserving purchasing power and offering timeless financial security. 6. Limited supply and growing demand. Favorable long-term dynamics. The global supply of gold is finite, and new discoveries are becoming increasingly rare and expensive. Simultaneously, demand for gold is steadily increasing from various sectors, including central banks, jewelry, technology, and investment. This fundamental supply-demand imbalance creates a favorable long-term outlook for gold prices. As demand continues to outstrip supply, the value of gold is likely to appreciate over time, making it a potentially attractive asset for long-term retirement savings. Gold IRAs, your gateway to diversified and secure retirement savings. A gold IRA, or precious metals IRA, is a specialized type of self-directed IRA that allows you to hold physical gold, silver, platinum, and palladium within the tax-advantaged structure of a retirement account. It offers the same tax benefits as traditional and Roth IRAs, tax-deferred growth for traditional gold IRAs and tax-free growth for Roth gold IRAs, but with the added advantage of diversifying your retirement savings into precious metals. Key features and benefits of a gold IRA. Diversification. Beyond paper assets. The primary benefit of a gold IRA is diversification beyond the traditional realm of stocks and bonds. By allocating a portion of your retirement portfolio to precious metals, you reduce your overall portfolio risk and enhance its resilience to market volatility and economic uncertainty. Inflation protection. Within retirement savings, a gold IRA allows you to directly integrate gold's inflation hedging capabilities into your retirement savings. As inflation erodes the purchasing power of traditional assets, the precious metals held in your gold IRA can act as a bulwark against this erosion, preserving the real value of your retirement funds. Safe haven asset in times of crisis. During periods of geopolitical turmoil, market crashes, or economic downturns, the precious metals in your gold IRA can serve as a safe haven, potentially appreciating in value when other assets are declining. This provides a crucial safety net for your retirement savings, protecting them from the worst effects of market turbulence. Tax-advantaged growth for precious metals. Gold IRAs offer the same tax advantages as other IRAs, allowing your precious metals investments to grow either tax-deferred or tax-free, depending on whether you choose a traditional or Roth gold IRA. This tax-advantaged growth further enhances the long-term value of your precious metals holdings within your retirement portfolio. Direct ownership of physical metals. Unlike gold ETFs or mutual funds, a gold IRA involves direct ownership of physical precious metals. The metals are securely stored in an IRS-approved depository on your behalf, but you remain the direct owner, providing a sense of security and control that is absent with indirect investments. Potential for long-term appreciation. As discussed earlier, the favorable supply-demand dynamics for precious metals, particularly gold, suggest the potential for long-term price appreciation. Holding precious metals in a gold IRA allows you to participate in this potential appreciation, adding a growth component to your diversified retirement portfolio. Setting up a gold IRA, a step-by-step guide. Establishing a gold IRA is a relatively straightforward process, but it requires careful adherence to IRS regulations and working with reputable professionals. Here's a step-by-step guide. 1. Choose a custodian. The first and most crucial step is to select a reputable gold IRA custodian. The IRS mandates that all IRA assets must be held by a custodian. A custodian specializes in administering gold IRAs, handling all the paperwork, storage arrangements, and compliance requirements. Look for custodians with a proven track record, transparent fee structures, and excellent customer service. Beware of custodians that pressure you into specific investments or offer overly aggressive sales tactics. 2. Fund your account. Once you've chosen a custodian, you need to fund your gold IRA. There are two primary ways to fund a gold IRA. Rollover. You can roll over funds from an existing traditional IRA, 401k, 403b, or other qualified retirement account into a gold IRA without incurring tax penalties. This is the most common method for funding a gold IRA. The rollover process must be handled carefully to ensure compliance with IRS rules. Your custodian will guide you through the rollover process. Transfer. You can also transfer funds directly from a taxable brokerage account or bank account into a gold IRA. However, transfers from taxable accounts do not offer the same tax advantages as rollovers from existing retirement accounts. 3. Select your precious metals. With funds in your gold IRA, you can now choose the precious metals you wish to hold. The IRS has specific requirements for the types of precious metals allowed in IRAs. Generally, these include gold. Must be coins or bars meeting specific purity and fineness requirements, typically 0.995 fine for gold bars, 9999 fine for gold coins like American Gold Eagles or Canadian Gold Maple Leafs. Silver. Must be coins or bars meeting specific purity and fineness requirements, typically 0.999 fine for silver bars, $9.99 fine for silver coins like American Silver Eagles. Must be coins or bars meeting specific purity and fineness requirements, $9.995 fine minimum. Palladium. Must be coins or bars meeting specific purity and fineness requirements, $9.995 fine minimum. Your custodian will provide you with a list of IRS-approved precious metals that you can purchase for your gold IRA. Work with a reputable precious metals dealer to purchase your chosen metals. 4. Secure storage. By IRS regulations, you cannot store gold IRA precious metals at home or in a safety deposit box. Your precious metals must be stored in an IRS-approved, fully insured depository. Custodians typically have established relationships with secure depositories. Ensure that the depository is reputable, fully insured, and segregated storage, meaning your metals are stored separately from other clients' metals, not commingled. 5. Ongoing management. Once your gold IRA is established and funded, your custodian will handle the ongoing administrative tasks, including storage and insurance, ensuring the secure storage and insurance of your precious metals at the depository. Reporting, providing you with regular statements of your account holdings and activities. Distributions. When you reach retirement age and wish to take distributions from your gold IRA, your custodian will facilitate the process, either by selling your precious metals and distributing the cash, or by physically distributing the metals to you, subject to certain conditions and potential tax implications. Is a gold IRA right for you? The decision of whether to include a gold IRA in your retirement portfolio is a personal one that depends on your individual circumstances, risk tolerance, and investment objectives. However, in today's economic climate, the arguments for diversification beyond stocks and bonds are increasingly compelling, and gold IRAs offer a powerful tool to achieve this diversification. A gold IRA may be particularly suitable for you if you are concerned about inflation and currency debasement. You are seeking a hedge against stock market volatility and economic uncertainty. You want to diversify your retirement savings beyond traditional paper assets. You appreciate the security and tangibility of physical assets. You have a long-term investment horizon for your retirement savings. You are comfortable with the fees and considerations associated with gold IRAs. Conclusion: embrace diversification. Secure your future with a gold IRA. In a world characterized by economic volatility, inflationary pressures, and geopolitical uncertainty, Relying solely on traditional stock and bond portfolios for retirement is becoming an increasingly precarious strategy. The time for proactive diversification is now. And gold IRAs offer a robust and time-tested solution to diversify your retirement savings beyond the limitations of conventional investments. By incorporating physical precious metals into your retirement portfolio through a gold IRA, you can enhance portfolio diversification and reduce overall risk, protect your savings from the erosive effects of inflation, provide a safe haven during times of economic and geopolitical turmoil, preserve your wealth for future generations, potentially benefit from the long-term appreciation of precious metals. A gold IRA is not a get-rich-quick scheme, but rather a strategic component of a well-rounded and resilient retirement plan. It's about taking a prudent and proactive approach to securing your financial future, knowing that you have diversified your savings into a tangible, time-tested asset that has historically thrived when traditional assets falter. Take control of your retirement destiny, do your own research, and possibly consider exploring the possibilities of a gold IRA.